Welcome to another video. Welcome to another video. Recap last week. Eligible for payout, got the money. Ray going for Z4 payout. So it's behind us now. The only thing that's ahead of us is the future, right? That is this. All right. Okay, cool. So let's jump to the breakdown. Remember, I look at the dollar index, but I don't trade it. Right? It's just I look at it, but I don't trade it. But I don't really trade currencies. I've been on indices now for a long time, so yeah, I don't really trade this. But anyway, chart is a chart. Let's see what's happening. The narrative is we took sell side liquidity over here. So high probability that the market could want to go higher. Why? We are oversold. We are oversold. We are oversold. We have a quarter of down prices. So there could be a shift going higher, but the price needs to confirm that, right? So on the weekly time frame, do I see anything? Yes, we do have a short-term order block over here on the weekly time frame that we could draw towards, right? And we had this gap as well. So I'll take this away because I'm going to put this. All right. Fair value gaps for me are more powerful than order blocks. Where is it? We have this gap over here. And the reason why I'm marking out this gap is price is trading above it. Right. So it's giving us, it's confirming a bullish stance on the dollar. It's confirming a bullish stance on the dollar. And if you look at it, this is like a market make or buy model, right? We had a consolidation. We left the consolidation, low risk sell, went down. This is a market structure shift. So we're looking for accumulation, then distribution higher. So it's fair to say that it will be nice to see higher prices on the dollar. With that being said, let's come to the cable, do a top-down analysis. So we've been, for the last 3 months, it's been pushing higher, right? So it's fair to assume that it's oversold. Yeah, overbought, sorry. If we take this, because this is the range that we are currently trading in, we're above the 50% level. So that means we're in premium. So whenever we're in premium, it's safe to always assume that we could be going lower, right? So, and because this is a mirror inverse of the dollar, we took out this sell side, this buy side liquidity. So it would be favorable to see lower prices, right? Another thing which we left fair value gaps here. So we just need to see if there's anything that confirms. Right now, nothing is really confirming that we are going lower. Okay. I'm just saying that because using narrative that we are in a very overbought condition, it would be nice to see the price come down first before we can go a little bit higher. Okay. But nonetheless, we trade what we see, not what we think, right? We do have a fair value gap here. So what needs to happen then with this fair value gap on the weekly time frame is price needs to respect it. We can tap into it as far as here, sorry. Work with me, prof. Work with me. As far as here, right? And what usually ICT will do is will measure fair value gaps in quadrants. So 50% of the fair value gap is here. If anything, if the market taps this and goes lower, then that changes the narrative, right? So we need fair value gaps to be respected. If it respects it, where are we going? We already taken sell side, buy side liquidity here. So these highs, but for me, that will be like it's pretty much a stretch because if you look at the way price has been going around, especially last week, is like we created the high. Now it's not a market structure shift yet, right? Because at least if we break this with volume, with candles like this, and then retest it and drop, then that will be confirmed. But In my case, I'm neutral on the pair. So if you're looking for trade entries, it's safe to go long, but I believe higher time frame we could be going short. Cable, GBP USD. So if you look at this chart compared to the euro, there's a divergence, right? Because the euro took out these highs, previous month's highs, or previous year's highs, but this one didn't. It created a double top. So what does that mean? That means this area right here, this order block right here, is acting as resistance. So we could be looking at a quarterly move lower. So you can see like in the last 3 months, it's been one-sided for the last quarter. So since we're in Q2, this was probably the high, and you can see this is a um, turtle soup meaning they ran the high and immediately dropped lower, right? So it's not a market structure shift. Market structure shift, we confirm it by like in this area when the candle breaks through, right, and doesn't close underneath the previous candle but higher, then it's a market structure shift, especially with volatility like this, right? So in this case, that's confirming that the market is looking to go lower, right? Market is looking to go lower, and on a longer time frame, would be nice to see the market come here or here. And why am I marking these areas out? Because these are fair value gaps, right? Fair value gaps. So there's a lot of targets to go for. But short term, this would be a great target. Why? It's the last order block before the highest high. So which is what? It's a breaker. All right. So we have a daily break over there. That would be a great target to come for. And you can see the market right now. This is the divergence I was talking about. Now you look at this high and that high, right? We have that, and here we have that. You understand? So it's a smart money divergence or smart money technique, whatever you want to call it. But nonetheless, it's confirming that one of the two is weaker than the other one. So if this one, the euro, last week's high, this week's high compared to the previous week's high was taken by GBP, but was not taken, right, by the euro. So that means there's a divergence moving lower. And if you have to look at the 4 hour time frame, the high, there's a divergence here. You see this low is higher than that low. So that means the dollar's buying, right? And this is coming lower. So safe to say, look for shorts if I was trading the pair. Okay, let's look at gold. Gold's money on a higher time frame. A higher time frame, we do have this rejection block over here, right? Posted the high, nice, but then it's opening underneath the body of the open, right? So in gold, I'm bearish. Like I caught sells last week. That got me the profit. That got me out of not out of drawdown, but into profit for to be eligible for a payout was because of gold. So we have a rejection block. And where would gold go? This will be the first low, but ultimately this body. Why? Because this is the last candle they sold at before they went higher. So that's also a breaker. That's what I'm looking at. Order flow is bearish for me. And also this is a market maker buy model. We have a consolidation. We ran highs, accumulated, went up, smart money reversal. And now we're just distributing lower. So in that case, if we're bearish, where would I sell? Where would I sell? So the first place where I would sell is above this high, right? That's opportunity number one. Let's run this off. All right. So that's where I would sell first. And another thing that makes this so powerful is we have a fair value, an inverted fair value gap right there. So I have buy side liquidity, I have this rejection block, as well as this fair value gap. So I'm looking for price to come in anywhere above this level. And if I have to use my fib to grade the fair value gap, this order block is almost in line with the 50%, right? So anything in premium, which is premium meaning over above the 50% line, I'm looking for shorts. And yeah, enter here, bah, done, done. Let's look at the indices. Look at the indices. So indices are, it's pushing higher on a higher time frame. Why? To close this imbalance, right? Which could be to rebalance and then drop. Okay. But until then, we don't know. For now, what we see is higher prices. Okay. So if the market is going higher or predisposed to go higher on the higher time frame, we look to buy below the open. Right. So I have a monthly order block right there. And I would actually remove this Y because I have a more powerful thing here, which is a fair value gap. Excuse me. Got a fair value gap. Now, if you look at the swing from this high to this low, we're above 50%, right? So I want to see how price reacts when it gets here. I think the market will open, drop a little, and then rush to get up there, only for it to sell to go lower. That's what I think, because we are in the overbought area. And where would I sell? Well, firstly, what I see is we have a daily order block right there. All right, so we want to see how price reacts when it gets to that level. And I mean, this is a market maker buy model, right? Consolidation, left, low risk sell. Distributor took sell side liquidity, rallied higher, only for it to drop sharply. Market structure shift. We distributed higher. We accumulated to take out lows, which is accumulation, and we broke that high. And it's crazy. After we broke the high, we started accumulating on the high, right? So now resistance turned into support. So where's the next target? That over there. So I believe once we clear that, and if we get up to that range, we could be into another cycle, another market maker sell model going lower. That's what I'm looking at. But for now, I'm long until the market proves me otherwise. And yeah, man, these markets are the same. It's US 30. But if you look at how US 30 is moving on a higher time frame compared to the to the Nasdaq, there's divergence. This one is weaker, right? It's weaker. So we have that uh, monthly fair value gap. We have that weekly um, bearish order block. And if you take the range, which that's the high to the low, we in premium, right? Anything over 50% is premium, anything below is discount. So we're in premium prices. So we just want to see how the market will move. We have gaps here that they kind of closed it, but those are future long-term targets. But for now, we come into to balance the inefficiency, right? Because price moved aggressively lower when Trump was busy with the tariffs. So now they have to little by little fill this inefficiency. But once it's rebalanced, long term, I mean, if you're a trend line guy, long term, this is a bearish market, right? So, but for now, we trade what we see, not what we think, right? So that's just the narrative. That's just the narrative. So it would be nice to see the market come up here, close this imbalance that we have over here, and then drop lower. That would be nice to see. Okay. Uh, Two. Okay. My favorite pair. My favorite pair is this right here. And I mean, just looking this on the 4 hour time frame, this is a market maker buy model, right? Consolidation, right? Smart money reversal. So that means the next piece of the puzzle is right there. Right. If you don't know what I'm talking about, go through ICT content where he speaks about market makeup and sell models. Yeah. Oh, cereal. Okay. 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 Sharp. Yeah, I'll go now. Palomia, okay. Palomia, point on it. No, no, no. Who, my boy, I'm coming. I'm coming. Oh, sharp, 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 sharp. Kids will order you around like, and so you gotta have money when you're a parent, bro. Yeah. Anyway, there's a lot of imbalances here that the market is about to feel. Um, let's go to the monthly time frame. So monthly time frame, obviously, we have a very powerful signature three pattern candle here, which is a market maker. I mean, which is a fair value gap. So I'm looking at the market is drawn to that fair value gap, and I want to see what happens when we get there. If you look at the swing, just like the other pairs, we in premium, right? Selling opportunity. So I believe Monday is gonna open, create the high, take out the stops, and then break down, and then we can go lower. That's what I'm looking at because yeah, we need to take out that high. Definitely. There's equal highs over there, bro. Like if I have to put that referencing this as well as like the close of these candle bodies, we yeah, it's a market makeup buy model. They're coming to take that. So you can rest and believe they're coming to take that. So where would I buy? I'm looking at this 4 hour order block right here. Probably means not straight. My parent told me to go and buy milk. Yeah. So yeah, that's what I'm looking at. If it gives me an opportunity, if it can drop down, uh, rarely drop down, I'll buy it and put my TP right tip there because I know Tuesday the step is going lower. All right, let's come to my other favorite pair, Germans. All right, so obviously higher. All right, let me just mark up this high over here. So obviously higher. And now look at this, right? We dropped aggressively, right? And now they're rallying up the market to balance this, right? And it's also coming up aggressively. What do you think will happen once we close this inefficiency? They're gonna have to come and close this again, right? So seesaw the whole way, seesaw up and down, up and down, up and down. So if you pull a fit from here to here, we're obviously over 50% of the range. So it would be nice to see prices come down a little bit short term before they push it any higher. So this is also market makeup buy model, not as clear as this. I mean, there you can easily see, right? High, low, consolidation, broke it, retest, low market structure shift, and. So yeah, I'm looking for longs. So where will I buy? Where will I buy? So firstly, I have my favorite friend, that guy. And I never come down to the 1 hour because I'm a short-term trader, right? Trading the weekly candle. So what am I looking to happen? I'm looking for gap down, into this 9:30, reject, come back around 11, 2:30, boom, go higher until they're done. If that happens, I'm done for the week. I'm done for the week. So I hope you enjoyed that. Until the next video, man.